So this is our both weekly and daily cycle analysis for the S&P 500. Now, we are still in the late stages of this intermediate term rising phase. Low that is due 1028 to 12.2. There are rising support zones here from 55.87 up to 55.15 and then to right around 54.18. On the upside, you can see that there's a zone here from 58.54 up to 59.10, and then the top of this zone is at 61.22. So this is super important. This is a rising phase which needs to be trusted until it tells us otherwise. That is so important. It is so easy to actually get out of a market. Frequently, it is hard to get back in. So it is very important to trust your indicators. Of course, there will be moments of times when they are whipsawed, but that's how you can be involved in an underlying for longer, is if you trust the readings that are coming out of the indicators. They have been positive really ever since this low that formed back in early August. They all turned up and they held positive throughout this whole move. So it will keep things simple if you simply trust the indicators that you have on your chart. We'll have to be watching for a shift in bias, but right now that bias is still positive. If you jump over to the daily chart, so there's a low that is due over the next couple of weeks, but it's again important to follow the cycle structures. Higher cycle highs, higher cycle lows have not been violated. No obvious shift in trend. And if you draw on your fibs, there's a 78.6 down here at 57.20. We would need to lose that for there to be an obvious reason to be concerned about the rising phase in the S&P 500, and only a loss of that low at 56.74 would be a breakdown in the cycle structure. Absent of that, this is still positive. On the upside, there are levels from 58.53 to right around 59.10, and keep in mind there's a low that is due 11.1 to 11.12.